your company up here. Let's tell everyone a little bit about Aeris, an established copper and gold mining company. They're on a really exciting growth trajectory with operations both here in New South Wales and also over in Queensland. To see if he can excite us into investing with them, would you please put your hands together for Andre, everyone, today?
Thank you very much, Christina. And I can add, we will have by the 1st of July, we'll have an asset, the Jaguar mine in WA, the Mount Colin mine in Queensland, and the Stockman project in Victoria. The transaction we announced last week. We are busy with the funding. Most of the funding has been raised. So I'll take you through the acquisition and the way forward for the business. Thank you very much. So as we said, 2 years ago, we bought the Cracow gold mine from Evolution, and we kept on saying we want to grow the business further. We're always looking for further opportunities to bring more assets into the portfolio and upgrade the portfolio. And I believe we just did that last week. So we have bought the Round Oak Minerals assets from Washington Soul Patts for $234 million. The transaction will be funded through an $80 million cash payment, or the deal will be done with $80 million cash and $154 million in equity to Washington Soul Patts. The deal is done at less than 2 times EBITDA for FY23, which is significantly lower than any other transaction which has been done for quite a while, especially in Australia. And we'll talk through a bit of those metrics as we go through the presentation. We will acquire it debt-free. They will also leave in $16 million or nearly $17 million of cash in the business. And that is on top of working capital, which would be calculated at the end at completion. As I said, they'll become a 30% shareholder in Aeris. Rob Milner, chairman of Washington Soul Patts, will join the Aeris board after the completion of the transaction. So what we're getting 2 cash-generating mines, one in Queensland, which is the Mount Colin mine, and the Jaguar mine in Western Australia. And then we also get a very high-quality project in the Stockman project in Victoria. The funding is going to be done through a $117 million equity raise, which both the placement and institutional entitlement was completed actually yesterday. We came out of a trading halt yesterday morning, and with a conditional placement of $43 million, or actually a rights issue of $43 million to be completed with a conditional placement at completion to fund the $117 million. The entitlement offer will be launched on the 5th of May. So we believe it's on strategy. As I said earlier, we always said we want to grow this business by adding more assets and upgrade the portfolio. And I think this brings exactly that to the business. It's increased the scale of the business. Basically, production goes currently from about 33,000 tons copper equivalent between Tritton and Cracow to up to 63,000 tons on a copper equivalent basis for FY23. We also bring in, as I said, the Stockman project, and you can look at that. The reserve and resources significantly increase as part of the combination of these 2 businesses going forward. And what you'll see in slides coming up, the quality of those resources is significantly better. It strengthens the balance sheet. The EBITDA forecast for FY23 is $306 million. So it brings in significant additional cash into the business. And then it allows us to fund, and for those who's been following the business would know, Tritton, we're in the investment phase. It will also set us up for investment into Stockman as we go forward. It sets up the platform, well funded to see all these projects out to completion. It does give us opportunity to look at opportunities to within the business to fund. If you look at Stockman, if you launch a Stockman project, that's as good as a new acquisition. And the aim is to bring that in production by FY25. We will remain a copper dominant producer. And as you can see on that slide, on a pro forma basis, we'll still have 60% of our copper as a copper producer. We are bringing a little bit of zinc. And I guess at $2 a pound zinc, there's a lot of revenue on the zinc and then the gold. So within the reserve resource position, we always wanted to remain a copper dominant player, and this will still result in us being a dominant producer of copper. So this is how it looks. Krakow will do about 52 to 60,000 ounces in FY23. Tritton will do around 22,000 tons, but within 2 years after that, we'll hit the 30,000 tons coming out of Tritton as we develop Constellation. The Mount Colin mine, although it's a small mine, it's doing 12,500 tons. It's in a cash generating phase. Over the next 2 years, it generates significant cash. But what we see in that North Queensland, Northwest Queensland area is how do you set up a business using the model they're currently using for Mount Colin, and we'll talk a bit more about that as an opportunity. And then Jaguar, although it's going from 19 to 16,000 tons of copper equivalent with between zinc and copper, it's an investment year for us in 23, and then after that it steps back up to historical numbers. But it's all about setting it up and creating life out of Jaguar. And then the Stockman project will deliver more than 30,000 tons of copper on an annual basis, copper equivalent on an annual basis once that's up and running. Currently have a 10-year reserve life, and so it's important for us to get that project underway. So very nice set, very good portfolio. If you then put that in perspective, we came out the other day with an announcement and an upgrade on the Tritton guidance for the longer period, whereby 25 Tritton will hit 30,000 tons of copper. And from then onwards, and it's all about investing in the next 2 years, bringing in Constellation, bringing in a Avoca tank, bringing all these high-grade deposits into the production profile will then deliver us a substantial life increase. And by the end of FY30, the Constellation discovery, which we discovered 2 years ago or 18 months ago, will still have a significant resource left after that period. So high potential for further extensions beyond the 8 years. 2 years ago, we bought Krakow. We said it's got about 2 years mine life left, but we think there's more. 2 years later, we're standing here and say, well, we think there's 4 years life, and we still say there's potential for further extensions. So it's one of those assets. You need to set it up in the right format, keep on exploration, and extend that mine life. The Jaguar mine, 9 months ago, it had 2.5 years life. They've discovered new deposit, they've discovered extensions. Now we're saying it's 4+ years mine life. So it's all come back to that continuous exploration at those mines. Mount Colin is sort of at this stage a hard and fast 2 years, but generates significant cash. But then we've got the Bamborough deposit, which was mined as an open pit you can go to, and everyone knows that that's a big copper region, and we do have a lot of tenements, big tenement package, but we also see that with the relationship we have for toll treatment of those ore, that we can put up a little business setting up in that Northwest Queensland. And then obviously Stockman, the aim is to have a investment decision in FY23 with starting to build it and be in production by FY25. So a lot of work to be done. But you can see in that portfolio, you're going to end up with 2 long life assets and 3 assets, which has got high potential to further extend beyond the current around 4 years, which we've got on that graph. These are some of the metrics. See the resources from where we are today with an acquisition is going up by 200%, reserves going up by 400%, production is going up by 81%, so you nearly double your production in FY23. What I do like about this, your resource and reserve grades go from currently 1.4% to over 2% on a copper equivalent basis. So you are bringing better quality tons into the portfolio. And then on EBITDA basis, you go from 182 to 306. And that's the difference between that price and spot price is significant. If you put spot prices in, those numbers are quite higher. You look at our peers, currently we'll go from 35 to 63, so we'll move upwards. On a market cap, once a deal is done, on this basis, you'll be $550 to $600 million market cap. The key takeaway in my view is the bottom right, where you look at the multiples we're doing this deal, the multiples we traded at before we did the deal, and even after completion, you'll still be below 2 times EBITDA, and everyone else trades 3+ or 4+. And I think that's the potential uplift by delivering on what we're saying and where we are going with this business. Quick snapshot on the assets. So Round Oak, the Jaguar mine, you can see the history down the bottom. They went up from 14 to 21 in FY21, and then maintaining around 20,000 tons. With the discovery of the new deposits, there's an investment phase we will go through in FY 2023, and then there'll be a step up post that very large tenement package. Good opportunities outside the current mine, the Bentley mine they're mining, to further extend the mine life even outside the current deposits being mined. Look at Mount Colin. So at Mount Colin, you can see the map on the right-hand side. I think that to me is an important takeaway. Mount Colin is in the cash harvesting phase. As I said, will generate significant cash, but the model there is been run by Barminco as a contractor, a small office setup, a small camp setup. The idea for me is you go to Bamborough. If that stacks up as an underground opportunity, you pick that up and you go to the next one. It all gets treated currently at Innes Entry, but in future, potentially it will be treated at the Mount Isa facility. And then you look at the region, a lot of these guys are back in the rooms over there as explorers and producers. And I think love to start to look at what's the opportunity to grow this model of being a small producer, building a bigger portfolio in that region. Look at Stockman, 10 million tons of reserves at plus 4% copper equivalent. Those are good numbers. The production profile will go up to plus 30 to 35,000 tons of copper equivalent production. The pre-feasibility study was done in 2019. They have already started the DFS, so they're busy with final design, test work, and upgrades. We will pick that up, obviously, rework it. I think there's a great opportunity here to look at this from a 21st century mine and actually within the whole ESG framework. We know it's in a beautiful part of the world, and we will relook and have a good look at what's the best way to move that forward. The aim is still to have investment decision by FY23. The main approvals is in place, so they have a mining lease, they have an infrastructure lease in place for a tailings dam, and own the property. My view is if you've got those three in place, you've got most of the key critical approvals in place, and the minor approvals is going to take time and effort, and that's what we will do. Quick update on Aeris. You look at Tritton. This is what we put out a few weeks ago, where you can see the Tritton production profile will go back up to 30,000 tons of copper. And it's all about getting out of the Tritton low-grade mine, low grades. We're currently mining out of Tritton deeps into better quality tons. So we're bringing in Avoca. So currently we're mining Tritton at 1.2% copper. The Avoca tank, the mine which we bring online, will mine at 2.6%. The Budgerigar mine, which will start production next month, will mine at 1.8%. So it's all about bringing in better quality tons into the production pipeline, which we will then deliver that production profile as we move forward in that 8+ year mine life we're talking about. Then you look at Krakow. It is our view. Krakow is a 50 to 60,000 ounce copper producer in that 4-year plan we have. It's all about keep on exploring. We have now moved our attention to the greenfield side towards the south, and within the next month we'll put a few deep holes into new targets, which was identified through an MT survey. But we have 3 drill rigs going underground, and it's all targeting moving out of the old workings into new targets. So you'll keep that going at those sort of levels, and then generate a exploration pipeline for Krakow. I guess simple way forward now with the 4 operations. Each one of them has got their own strategic plan. Tritton is all about delivery, that 8-year life, delivery the 30,000 tons, and invest to get that in place over the next 2 to 3 years. Krakow, as I just said, that 4-year life, it's all about exploration. We said it was 2 years 2 years ago. Now we're saying it's 4 years, and it's all about focusing. Jaguar mine is exactly the same model as Krakow. It's got that 4+ year life, but it does have significant external potential, further mining potential on the tenement package, and we will start to put some money into those. Northwest, it's all about a business opportunity, using the significant cash which will come from that to fund the growth of the business, but also to see if you can set up a business hub in Northwest Queensland. The synergies we see as part of this combination, obviously, they have got a corporate office in Brisbane. which is same as us. So we'll be obviously synergies by combining those two offices. We've seen significant benefits of the synergies from buying economies of scale from Krakow, and we believe we'll see the same with this. And then obviously there's some shared services in the way forward. So I guess that's probably not bad timing, but great opportunity for us. We always seen that as what we wanted to do. And I think this is delivering exactly into the strategy we've always said for Aeris Resources. Thank you very much.
Thank you very much, Andre. Remember, you can go out and have a chat with him in the exhibition hall over the next few days as well. Ian Bamborough, would you please join us, sir, up here on stage? Ian is the Managing Director of Saturn Metals, and he's going to talk to us about his vision for a large-scale, low-cost gold project called Apollo Hill, and that's located in Western Australia. Would you please make him very welcome?
Thank you for the introduction, and thank you everyone as well for the clap. I'll start off. Saturn Metals has been listed just over 4 years on the ASX, gold-focused West Australian company. First of all, where are we? We heart of the Eastern Goldfields in Western Australia. We have 1,000 square kilometres of contiguous ground in the heart of one of the most prolific greenstone belts called the Lunar Norseman, on a structure called the Keith Kilkenny lineament, which is responsible for a number of multi-million ounce deposits you see around us there. At the heart of that land package, we've got a single deposit of 1.47 million ounces as of yesterday morning, so fresh resource upgrade, which I'm going to talk about today, and a beautiful land package. And I guess the other key points on that slide is beautiful infrastructure and most importantly, good gold infrastructure, and also some great strategic options around us with some of our peers in that particular region. I think corporate snapshot, probably the key points to point out on that slide is a very tight, small share base. We've managed to keep that structure, that share structure, very tight in the 4 years. Excellent cash position for an explorer, just under $10 million. And then I think one of probably the other key points is if you look at our shareholder base for a junior company, we have about depending on the way you look at it, 43 to 53% of our stock is held by long technical institutions, particularly out of North America, who I think understand this particular deposit type that we're developing and exploring for, and provide us with some tremendous support and base for our journey moving forward. And I think there's some great broker coverage there for anyone who wants to look that up, and or you can always come and see us at the booth and we can make sure you get it. And also probably EV per resource ounce figure of $27 an ounce. I know it's my job to tell people when I think things are when I think the company's undervalued, and I don't think you're going to get a better buying opportunity than right now today. This is what the deposit looks like. It's a big blob of rock, big tonnage. It is low grade. There's no getting away from that, but it works for a number of reasons. And the first is its geometry. It's about 500 meters wide in one continuous zone, 2.5 kilometers long in one single, simple, low stripping ratio, so low cost, bulk mining scenario, low unit cost pit. And just to put that in context, it's not till you actually stand on that thing that you see that's not much difference to the size of the super pit in Kalgoorlie at this point. And as I'll show you later, there's plenty of room for that to keep growing. This is a look at why it works. First of all, is its size and its width and the size of ore zones. So because of that amount of ore within the pit and that low strip ratio, it means we can access a much lower cost than the most typical deposits in this region. Because the deposit's so thick, we can use bigger mining equipment. So we see economies of scale, and we can access things like face shovels, which mean we start pushing that unit operating cost down again. And you can also see on that diagram, you can see last year's resource in the white pit shell, and then this year's resource in the blue pit shell. And you can see the difference or the additions we've added with about 31,000 meters of drilling this year. But what we have done with that resource upgrade, particularly yesterday, is reach what we think of as a critical mass, and particularly we provide baseload ounces for this whole region. And again, its simplicity is probably where it sits. Now, one of the ways we access, I'm just going to go about, one of the ways we access this gold is through a heap leach scenario. And I'm going to come on to why the deposit works as well from a process operating cost perspective. Now, heap leach in Australia is not particularly well known. So the point on this graph is probably threefold. One is we've entered a very different space in terms of deposits from a global perspective. And most of the deposits on this graph are shown in the US, where they're much more akin to this type of operation. The grade we talked about 0.6 grams, is not unusual and is quite common for this type of deposit. And actually, we're sitting in quite a nice space in terms of the grade of the deposit. The scale of the deposit, you can see there in the balloons that we're targeting, and strip ratios we've talked about. One more thing, I suppose, is the fact as we keep exploring, we keep seeing the direction there as we're moving towards some absolutely world-class deposits in the US. Round Mountain in USA, 4.4 million ounces, strip ratio of about 2:1, very similar to the pit you've just seen. And probably the lowest cost producers despite that low grade. So I just want to make the point that it's about economics, not just grade. The other reason it works is we've got a very simple, clean metallurgy. Essentially, we crush the rock up. If I play that little video there, you can, for those of you with keen eyes, you can see the gold grains in the quartz veins. The gold grains are nice and small. They're very easily liberated just through crushing. We don't have to grind this rock to pieces, which means low energy use, and again, pushing that unit cost down. And at that very coarse crush size, we've seen excellent recoveries, up in the 80%, plus 70% in column, which is the sort of large scale testing, all with very low cost structures. Again, low cyanide use, low lime additions, everything pushing that unit cost lower and lower and lower. And typically we'll see heap leaches in the value of $8 a ton processing cost versus $26, $27, $30 a ton for conventional milling operations. And that is a key differentiator here. I'm just going to, again, sort of reiterate that fact that 46% of the world's gold production comes from heap leach. So this is not unusual. This is not rocket science. This is nothing to be afraid of. 0.7, that's the average grade of all 275 gold deposits that are produced from heap leach in the world. So we're not really off the mark. 65% recovery. That's the average of all those heap leach recoveries. And those recovery figures I've just shown you on that previous metallurgy slide show you we've got an advantage there as well. Beyond that, I suppose we've now reached that critical mass, as I say, where I think we've got about 10 million tons for 8 years or 8 million tons for 10 years and producing over 100,000 ounces a year. So we're starting to move into that pre-feasibility stage or planning a pre-feasibility. And this is a first look at our infrastructure and things that we're preparing. And I suppose it's essentially a big sandpit exercise where you dig your rock out of one hole, put it on one pad, and a bit like your reticulation system in your garden, you drizzle the cyanide over the top and the gold comes out, which is quite nice. And it means lower energy use, lower capital intensity, just simpler. This has been the resource growth of the deposit in the 4 years since listing. I think we've added just under 1 million ounces in 4 years, and we've really seen that accelerate in this last 12 months in particular. And I do think we've got a lot more room to move. The first way we're going to find that is if you look at this particular slide, there's a number of intersections there. And what we try to do with our exploration strategy is we explore outwards. We look for lateral, near surface, cheap, efficient ounces. And there's some beautiful intersections there at typical sort of heap grades, heap leach grades, plus some fantastic ones at, much sort of higher deposit grades, scattered at just about every direction of that deposit. And that exploration track will continue. But again, was trying to build that one single simple mass. Beyond that, I actually have a vision for this system of it being a much, much bigger gold system than perhaps we're even giving it credit for at the moment. We've commenced pre-collars on this hole, and I'd really like to see this as some kind of tier 1 opportunity, and you saw those big bubble graphs, those big bubbles off to the right-hand side on that previous graph where we see those deposits in the US at 4 million ounce kind of scale. Then that's what we're going exploring for. And we've taken some bold step outs with our exploration dollars to really do that. So please watch this space for as we complete this hole this year. I mentioned the exploration ground which surrounds the deposit, and we do hold that central strategic position in the belt. And this ground hasn't been explored for a variety of reasons. One is there's a physicality of a lake there. Another one, historically, there was a heritage site which through solid social work with the traditional owners, we've managed to find a way to work through that. And my predecessors also did a really good job of that. And the one thing I can say is about that picture is there's a greenstone belt there. We're hitting every different angle of it, every different corner, and we're finding new gold deposits. Now, this work's only about a year old, and prior to that, there's been no drilling. There's one massive structure there, and everywhere we're exploring up and down it, we're finding new gold leads with some beautiful exploration intersections and some high-grade intersections and some big, thick tonnage intersections to add to that already base load position. We have 20,000 meters of assays pending and to report for Aircore, 3,000 meters of RC on some of those prospects you see there. So this is not a one deposit story. This is district scale, camp scale picture. And then last but not least, because we're in New South Wales, a couple of years ago, we also managed to joint venture into an excellent opportunity, which was, in my mind, too good to let pass by. West Wyalong, if I get my geography right, it's probably 250 kilometres northwest of here, was one of Australia's most richest gold fields in the late 1800s, early 1900s. Produced just under 500,000 ounces at about an ounce a tonne. Best year of production was 50,000 ounces at 3 ounce per tonne, about 90 grams a tonne. And last year we managed to get some exploratory holes into that for the first time in 100 years. Some nice geology, some great leads, I think technical success, but we'll be going back this year to have another go. And I just, given its tenure of mineralisation, I think that's possibly one of the most exciting things we've got, and perhaps a bit of a wild card that we can also play. What this really talks for, I suppose, is what we're going to do next after that resource upgrade. First of all, we're going to keep drilling. We're going to keep making this thing bigger. We're going to keep finding new deposits. We're going to improve the quality of that resource. And we're also going to look at that deep framework drilling when we try and change the scale of this thing again. Beyond that, we're thinking about a PFS. And there's a couple of things, checks and balances we're going to put in place. We've got some final met results due, which I just want to tick before we move on, but no surprises expected. And but also importantly, looking after shareholders' money. There's a project governance stage to go through where we plan and set our stage gates for this project development as we go forward. But the message is very much this deposit is coming out of the ground, and I think it's going to be one of Australia's most simple but exciting operations you can come across and just be an absolute base load for that particular part of Western Australia. That's what it looks like. And again, it's not till you actually stand on the thing, you get a feel for the scale of it. I'm sure if you look hard enough, there's a little exploration camp and some drill rigs and things on that map. Good foundation ounces outlined, really healthy budget, very aggressive program, and study work progressing to PFS. So please come and talk to me at the booth. And thank you very much.
And Bamborough, thank you very much, sir. I'm just happy to leave a little pause between my presenters and myself, so I don't clip into your time afterwards when we're showing it up on your own social media channels. Come on up here, sir. Mount Magnet we're going to now, just a little bit north of Mount Magnet, aren't we? Back in WA still. Gascoyne Resources is an established gold producer in that area, and they're currently developing 2 low-cost open pits, actively adding new ounces, which is why I stumbled there when I said producer, because you guys are pretty aggressive explorers as well, aren't you? Adding to your ounces each year with some interesting work you're doing. Managing Director Simon Lawson is going to provide us an update on the current state of play at Gascoyne Resources. Will you please make him welcome?
Thanks very much. That's the main open pit at Gilbey's. As mentioned, we are a producer, but we are a very aggressive explorer as well, as I'll go through. The usual disclaimer. Strategic focus. I come from a very disciplined background, spending a lot of time with mining engineers. I'm a mining geologist by training, so the first thing I did when I came into the company in November was to set a strategic focus, which has a very disciplined approach to what we're trying to do. I won't go through all this in detail, but basically we have a very strong business plan, and it's about optimizing what we have, maximizing our opportunities, and focusing on growth. Very active board. There's been a few changes to that board over the last few months, with my arrival being I suppose the start of that. We have a pretty small market cap for a gold producer. We're still earning our stripes at the moment. The perception of Gascoyne after coming out of administration was that we would struggle. We're still going, almost 2 years later now. And having been there for 4 months, I can see a pretty healthy future for what we're trying to do. And I suppose leading on from Ian Bamborough's talk there about grade isn't always the most important thing. It is, but we are proving that we can make it work with what we've got. Net cash of about $31 million. We are unhedged at the moment. We have no debt on our balance sheet, and we have supportive shareholders. That's a picture of the whole operation there. All the capex has been spent. You can see the waste dump and the tailings facility in the background there, the processing plant in the foreground, and the main mine Gilbey's in the centre there. I'll go through quite a few opportunities that surround that one mine. There's quite a few deposits there that are all starting to become, let's say, consistent in their strike extent. Gascoyne's projects are spread across most of WA. I am focusing purely on Dalgaranga. I won't go into detail on a lot of the other projects. We are looking at strategic options at the moment with what we do. Our main asset is our 2.5 million tonne per annum plant. So as I said, CapEx has been spent, that plant has been built. You won't build another plant in WA very quickly or very cheaply. I can say that for a fact. So I'm pretty happy to be the owner of that plant at the moment, and we are putting the right rocks through. We're producing gold from Gilbey's and Plymouth open pits. The Gilbey's pit is becoming quite mature in its age. So I suppose the main focus for us is life of mine and to grow those ore sources for that great plant. Recent near mine exploration success has targeted immediately along strike, and to our surprise, we did make a quite significant discovery, which is continuing to grow, and we will grow in that area to keep feeding that plant. My arrival at the company was heralded by the merger of Firefly Resources with Gascoyne. I won't go into details on how that sort of played out, but I am there now as the MD. And one of the things I came into the business and focused straight away on was people. It's one of those commodities that you can't trade, you can't be, you have to be honest with the people that are there. So I was very straightforward with the people when I came into the company. This is what we're going to do. I need the team to get around me, and luckily they all agreed that that would be a good idea. So we're focused very, very strongly on retaining the right people and attracting the right people, which, as everybody knows at the moment, the industry is quite difficult to do. Safety has been really paramount. Obviously, you can't work if you don't have people there, and if you're not being safe, people don't want to come to work. So safety plays a big part as a producer. There's a lot of activities that go on that are inherently risky. So we are very heavily focused on keeping people safe. We have a strong, experienced team. Despite the skill shortage, despite people talking about how costs are rising and how people are hard to retain, we have managed to keep a very strong core team and keep our costs down. We are environmentally responsible. I can't say that we're probably the industry leader in our ESG aspirations at the moment, but we're quite clearly focused on making sure that we're profitable, and then the ESG component with being responsible with the environment is something that we will continue to grow. Our focus on production and costs. Being a geologist, it's not always my strong point. I'm usually better at spending money than being careful with money, but we have achieved a record production for the operation for the March quarter. I was pretty proud of that. The guys on site were very proud of that. We obviously celebrated. It is a significant achievement from a company that worked its way out of administration about 2 years ago. So we are continuing to grow on that. Costs have escalated across the industry, but as I said, we are maintaining a very heavy focus on keeping those down and increasing our production profile. Obviously, the key is cash flow generation. As a strategic regional asset, we sit within a huge historic gold field or series of gold fields. Yalgoo was where I originally came from with Firefly. That is a standalone gold field in its own right. The Dalgaranga gold field has been around for many years, and Mount Magnet is obviously very well known. There's a lot of other operations in that area. Our plant is the biggest by far. I originally, I'll be honest, saw it as a liability when I walked in the door because that chews a lot of rock. But at the same time, the unit cost is very low. So $14 a tonne is what we're achieving at the moment, which is industry leading. I have to say it's probably a third lower than what most other mills can achieve. Gilbey's North is the main sort of aggressive result from our discovery, from our exploration that we've achieved. Pretty proud of that as well. 140 metres away from the pit, we followed up an air core hole, and that area is continuing to grow. This is a very rough outline of the, I'll say, pre-resource shapes, because at this stage we are continuing to drill. We have 3 active drill rigs on site with a fourth turning up tomorrow. Released today, 31 metres at 2.5 from 23 metres, and 15 at 3.16. Both of those holes actually ended in mineralisation. So we know that this is a much bigger system that we're just sort of scraping the surface of at the moment. That area there is about 250 metres long by 150 metres wide and growing. It's immediately along strike from our pit and probably closer to the mill than our current ore source. So pretty excited about that. Steeply dipping stacked loads, looks exactly like the Gilbey's deposit. So we're pretty comfortable that that is going to come through that mill fairly shortly. There's a cross section there. You can see this is just continuing to grow. We originally focused on the area on the right-hand side being the immediate along strike extension of the Gilbey's main ore zone. To our surprise, when we stepped back to drill deeper, we actually hit the zone on the left-hand side, which is continuing to grow. And we're just going to keep following that to the northwest. As I said, it's less than 1,000 metres to the processing plant, so it's pretty easy to see that coming through. Low strip ratio, open pit scenario, oxide profile, good grades. That's an aerial view over here. You can see the Gilbey's main pit in the centre there with the orange shapes being the main loads. Gilbey's North to the north there. You can see the arrow going off. Everybody loves to talk about open in all directions. I'm a mine geologist. I just want ore for my mill that is going to come into the mill. The yellow areas on the eastern side of the pit there are all areas that have been targeted historically as high-grade zones. They've never been brought into the mine plan. We're calling them the eastern footwall, so we'll be drilling those actively over the next 3 months. Plymouth, which sits down into the, just basically underneath some of those intercepts there, that Plymouth open pit is producing at the moment at about 25% better grade than what the resources said. So we're pretty happy with seeing that upside on reconciliation. You can start to see here, if you kind of squint that all of these separate ore bodies are actually part of the same fold system. So we're working on that principle. There's a few structural breaks, but basically it is one consistent system. This is Plymouth cross-section. Drill holes beneath the current mine design. The design of that pit is only about 80 meters at its floor. That was known mineralization. We're obviously hitting ore underneath that, so we will continue to expand that Plymouth open pit and continue to feed the mill. Some pretty good intercepts there. Historically, the mine, I think the reserve grade's 0.8. We are producing over 1 gram a tonne at the moment, and we will continue to do that. That is a major focus for us. We're not sidelining or shortcutting or high grading. We are actually focusing on only outlining the right material and mining the right material. Archie Rose, which is a deposit that's about 7 kilometres away from surface, very high, very intense drilling that was done historically out there. There has been a number of studies done on that. That's something that we're focused on as well. It's not on the mining list, so it's sort of second priority to the rest of the stuff that we're doing at the moment, but it's definitely good to see that there's more deposits within a 10-kilometre radius. Open pit oxide potential again. There's some good mineralization out there. You can see some good intercepts. All of this is obviously available online for download. If you can't read, I apologize if the numbers are too small. I suppose the idea is to get out there how much grade there actually is there and how thick it is. Yalgoo, where the Firefly story started. The Yalgoo goldfield has been relatively unexplored for 100 years. It's been held by different people. Obviously, something that attracted Gascoyne in the first place. It is 110 kilometres away from the Dalgaranga plant, so it sits within our sort of second priority at the moment. However, the 200,000 ounces at 1.47 is obviously quite appealing to us. We will continue to work on that and bring that into the mine plan. We're working to bring in a life of mine story here. That's our main focus, is to get that life of mine out there. Dalgaranga processing hub. As I said, the capex has already been spent. We don't have massive capex to come looking for. We are generating cash at the moment. We are drilling based on the cash that we're generating, so we're not asking people for money at this stage. Having said that, we just completed a capital raise to help get rid of our debt position that we had as a hangover, the last hangover of our administrative period. Glenberg, Mount Edgerton. I wanted to mention this because this is actually one of the most spectacular undeveloped assets that I've seen in any company, and it's held by Gascoyne at this point in time. If I had the opportunity, I'd definitely build a plant there, but at this stage we are heavily focused on making sure Dalgaranga is profitable. So we're looking at strategic options up there at the moment. There are some really good grades there, definitely some underground potential and a much wider 1 million ounce story up there. So our key takeaways, we're a gold producer who's maintaining their guidance. We're not pulling back from that. We're not saying, COVID this, COVID that. We are maintaining our guidance. We're on track to do that. As I said, we delivered a record quarter. We will continue to push the boundaries on what we can produce. We have a strong business plan that is about minimizing costs, improving cash flow, and getting that mine life out there. We have a modern low processing cost plant, huge plant, able to process at good unit cost. We have emerging discovery and expansion potential at Gilbey's North and Plymouth, as well as many other areas, but are mainly focused on Gilbey's North and Plymouth at the moment. And we're targeting delivery of consistent 1 gram head grade for the rest of this year and for the future. We have a strong balance sheet, good cash position. We will be continuing to drill, as I said, 4 rigs. It's good to see a lot of meters going into the ground and some good results coming out. We probably have about 1,000 meters at the moment that is sitting in the lab, and we'll shortly have at least 3,000 to 4,000 meters that will be awaiting assay. So lots of news flow to come from us. And I'll probably just leave it there with the resources and reserves. We're looking at making an update in that regard in June. The last update was done in March last year, so we're looking at making one for the middle of this year.
Thank you, Simon. So you're a good spender, not necessarily a saver, eh? Done pretty well though. We are going to take a little trip back here and WA business. Double check. Go to Queensland. 2 outstanding copper projects over in Queensland. The company Responsible for this is Revolver Resources Holdings Ltd. Now, they're an Aussie public company that's focused on the development of natural resources for the world's electrification. Revolver's near-term focus is copper exploration in proven Australian jurisdictions, hence they're looking in Queensland, and they're quickly progressing those two outstanding projects to the next stage. Joining us up on stage at the moment is Managing Director Pat Williams, here today to present the highly prospective Revolver story. Please make him welcome.
19.8% copper grades. Just wanted to wait 30 seconds in case there was any ASX delivery there to take that headline away from me again. But ladies and gentlemen, Pat Williams is my name. It's a pleasure to be here today. I'm as happy as a dog with two tails because I actually have two really good tales to tell you today. If I can work out how to advance. Sorry. Our company consists of two assets that we brought to the market in September last year. We worked on these assets as a private company for almost 7 years, significantly de-risking them so that we could hit the public market with the confidence and the momentum to give you the results that we're starting to see come to the market today. Our two projects, the Diane project in the Northern Minerals Province, northwest of Cairns, and the Osprey project in the world-recognised Mount Isa Mineral Province. We're kicking goals on both of these projects, and I look forward to explaining in quite some detail what we've achieved, where we're sitting right now, and what we've done since listing in September. Sorry about the technology. Is there something that's all right. I can say 19.8% copper grade again if you want, just while we wait. But so where we sit right now with both of these projects, and it's our job today as a newly listed business to really put the time and effort into explaining what we have in this outstanding proposition with Revolver. The Diane project, we've done a lot in a small amount of time since listing. We've completed multiple phases of exploration on site from October through to March, through the wet season, trying conditions, and we've kicked a lot of goals. Diane is a triple whammy project, multi-commodity, high grade, and with a completely overlooked adjoining mineralisation system that represents a significant scale right from the get-go. It sits on top of granted mining leases, and it is very much, and with half-ounce gold lying on the surface nearby as well, it represents for us a very large upscale opportunity that we're at the beginning of the journey of, and we look forward to taking further steps. Our project Osprey in the Mount Isa Mineral Province, we've had this project in our portfolio for a number of years, 7 years in fact. We've completed significant amounts of work, and what we haven't done a good job of explaining is we are sitting with results that illustrate that we're inside an IOCG alteration system already. So we're sitting on the precipice of some really amazing progress with that project as well. So our business has momentum. We have a number of phases of work underway. We've got more assay results next week. I joined the team on site next up at Diane for a downhole EM program, followed by a surface EM program. And sometime around the June-July timeframe, we'll be bringing to the market our initial resource estimate for the Diane project. Thank you. We're a newly listed business. September last year was our IPO. We've enjoyed really good, solid support, and we appreciate that. Our market cap at the moment is circa $80 million. And importantly, we're a tightly held business. More than 60%, or roughly 60%, is locked up for quite a period of time. So we're on the journey, we're heavily invested, and we look forward to delivering more outstanding results as we progress forward. All right. At Revolver, we're really in the game of solving the copper shortage. We're not here to just poke holes in the ground. I'm not a geologist. I don't get any great enjoyment out of drilling holes for the sake of it. We're here to solve a market opportunity. How are we going to get this synced? Am I just going to wave at you or something? Or I'm not going to stand here and lecture people on what we fundamentally understand. %19.8%. Right, good. Okay, how do I go back now? Anyway, look, I've got that. The issue on the previous slide, and I'm not here to kind of wax and wane about, commodity supply and demand. The simple reality is, yes, there is a demand. It's undeniable. Any scenario that we look at talks about a huge growing copper demand. What's really important from an industry point of view is to understand the diminishing supply. Supply is running out. So that's the compounding effect here. The industry needs more discoveries. We have 2 projects in world-class jurisdictions, in world-class circumstances in this country, and that's really part of the compounding opportunity that we're looking forward to. Let's talk a bit about Diane. Diane has history, and accidentally, or perhaps because we haven't done a clear enough articulation, we are not here to pick over the scraps of what others chose to leave behind. The Diane operation was mined in the late 70s, early 80s, a small amount of time, very high grade, near surface, massive sulfide. It was a direct ship ore circumstance. They walked away. Copper price was less than 50 cents a pound. There was still an ore body there. And as we found, there's a completely massive adjacent ore body that was just completely overlooked. So we're not picking through the scraps of what others couldn't make money out of. We are here to capitalise on what was not properly understood. So let's have a look at the work that we've done so far. So we completed our raising. We raised $12.7 million. One of the first activities was to re-drill, because with nearly 9,000 metres of historic drilling going back to the 1960s, not a lot of that was able to be brought forward for the basis of mineral resource estimates with the JORC criteria. So we were faced with the fact of having to re-drill again what was previously drilled. We kind of knew what was there. We've assembled a team around us, some of the smartest kids in the room, the brightest and the best, and they've managed to bring forward 6,000 out of 9,000 of those drill meters so that we basically didn't have to spend that money again. So a fantastic piece of technical work. We've had recognition from our resource geologists that we can use those drill meters. So in the first 9 steps of work with Diane, we've just covered the first 3. So we kind of at the 11th hour threw our initial drill program out the window and got straight into exploration drilling. So that was a significant piece of work that's given us a very big step forward, both in time frame with project achievement and with our bank account as well. So looking at what we've released and what we've brought to market late last week, we're very proud to put some results out, and I think I've said 19.8% copper grade. I think I've said that, but we've got a triple whammy here at Diane because we have clear evidence of an open, massive sulfide mineralisation system, some exceptional bonanza grade type material. Please visit the booth out there because not a lot of people get to see and touch 20% copper, but we've got some sticks out there that I think put into perspective just the richness of what we're dealing with there. So we've certainly quantified that, and we have more drill holes coming. So 9 drill holes came out last week. We've got another 8 next week. The 17-hole program, as I said, it wasn't re-drilling what we knew because we got the free kick with all of that good, smart technical work. 15 out of 17 of our drill holes were to pick up with the future exploration. Okay, and in those 17 drill holes, 13 out of 17 struck significant mineralisation. So the picture that we're hearing and seeing live is the fact that there's a lot more to give out of this baby than was previously understood. So I'd like to introduce a more universal definition of shape and size, and let's call it the football field, okay? So, you know, people talk about things open and, you know, lengths and grades. I don't want to do that. Okay, so what we've got here in two cross sections is the results of what we see underground. So firstly, in the top image, we've got the massive sulfide system. So we're open both at depth and along strike. So more of those bonanza grades, we fully expect to see those. We've got 10 holes cased ready for the program of work that starts next week. And that's specifically designed to look for off-hole conductors in the massive sulfide type mineralisation. The image on the bottom is what I want to get back to the football field analogy for. So there's a region of mineralisation that abuts the massive sulfide zone. It's at surface, it contains grade continuously, and the current surface footprint of that, that's defined by drilling that we've done, is 130 metres by 220 metres. So again, without bamboozling people with numbers, that's 3 football fields in size. So we've got a land mass bigger than 3 rugby league football fields of previously unidentified mineralisation that sits right up against, at surface, the massive sulfide zone. So again, we're happier than a dog with 2 tails at the moment. So taking that one step further and sticking with the universal dimension of football fields, another series of work that we've managed to fit in between October and now has been a regional rock chip sampling. And as I said before in the highlights, we've got 1/2 ounce gold sitting in outcrop on the surface. But with the results that we've achieved from the rock chip sampling and the assays that confirm both the multi-commodity and the continuous mineralisation, we have an area of 500 metres by 240 metres. And again, that's 17 football fields in size. So we've established a mineralisation footprint that far exceeds what anyone, you know, thought existed. And for anyone that had the perception that, you know, Diane's had its day, it's finished, you know, they're just picking through the scraps, couldn't be further from the truth. On its own, you know, this project is certainly something worth getting on, but another scope of work that we completed in fairly trying conditions in December and January was a comprehensive IP program. So 12 kilometres of lines through mountain goat country. And we've got ourselves even stepping out further from the historic mining area, outside of the 17 football fields of proven mineralisation. Even outboard of that, we still have a very target-rich, conductor-rich environment. These opportunities here sitting in front of us at Diane are completely taking us by surprise in a very good way. So we have momentum. We certainly have work in place. In the next few weeks, we've got the remaining drill hole assays coming out. You know, the majority of those will still contain more good grades, good mineralisation, and a larger footprint. So we'll be going from 3 football fields to 4 or 5, ideally in size, so that surface mineralisation is growing, it's encouraging. Multiple phases of EM work underway, and in the middle of the year, we'll certainly be finishing with our resource estimate. Just want to finish before I move on to Osprey quickly, but the size of the prize here at Diane, we have established and proven petrology, laboratory work. We have a massive sulfide system that we're chasing here. The likes of DeGrussa and Golden Grove, that's the size of the prize. They occur in camps, clusters, and we need to be systematic and strategic about how we explore for those. So the field work, the drilling, the geophysics, the analysis, the assay, more geophysics, more drilling. It's a repetitive process, and we're certainly on the way, and we're looking forward to kicking some goals there. I'm quickly racing down the time here. Project Osprey. We've probably done a poor job in not giving it the profile it deserves. We're in elephant country, we're looking for elephants, and we can see the tail of an elephant. Over the 7-year period, we have done a significant amount of work ourselves, nearly 5,000 drill meters, lots of geophysics, lots of work. What we have proven, what we have right in front of us now, even based on our own work, is proven evidence of an IOCG alteration system. So we are as happy as kids in a candy store that we have this information. We've not actioned it as quickly as we could because we had a lot of work to do at Diane to catch up on what wasn't known, but we've submitted over 500 samples to the laboratory in the last 2 weeks of what will further define for us the basic geochemistry, the rare earths and the gold, to give us the vectoring to help us take to the field later on in this year and drill some more holes. So I'll wrap up because I'm done. Thank you very much for your time today, and please stop by and have a look at the 19.8% grade copper sticks and have a talk to us about the business. Thank you very much.
Well done, Pat. Brilliant presentation. Thank you. Despite the gremlins trying to get in there, obviously thought that 19.8% was just too good to be true, and the poor old electronic technology just gave up. JP Varga Della Vega, can you come and join me, please, sir? The smiling man down there. A lot to smile about for you over the last few years, that's for sure. And JP's background, he is a Chilean-Australian mineral industry professional. He's got 18 years of broad experience in ASX mining companies, stockbroking, private equity firms. He's been a specialist lithium analyst here in Australia, and he's also operated a private copper business in Chile. He's worked for BHP, he's worked for Rio, he's worked for this last one, Codelco, wasn't it? Yes? But now he might be working for us. Let's see what he has to show us. Would you please make him very welcome on behalf of Galan Lithium?
Well, good afternoon, and thank you very much for coming. And I'm very pleased and delighted to be standing for the 4th time here at RIU, and it's been a great road so far, and I'm very excited and on behalf of our team as well to be able to tell you what's Galan about. And for the ones who don't know who we are very deep into lithium. We are in the lithium triangle in Argentina, and we have a psychic interesting project as well in Australia at the Greenbushes South joint venture that we have in Western Australia. But the picture behind me, it shows and it tells 1,000 words. Look, it's after 4 years and remembering my first RIU and explaining our thesis, trying to tell everyone we have this fantastic opportunity to show lithium and in the best operating salt flat in Argentina. And 4 years later, now I'm telling that we have 2 projects, one a DFS, the other one a PA study. And the world has changed. And 4.5 years ago, this was an idea driving the Hombre Muerto salt flat, not far away from where the picture was taken. And I had an idea, and I'm very pleased that this is taking shape, and we're moving strongly and fast into becoming a developer. And someone mentioned before, elephant country. Yes, we are baby elephant already. So we're taking shape and we're moving forward. And what you see behind is a piloting for our evaporation ponds next to our camp at Hombre Muerto West. So we're rapidly moving with our project. We have something very special. And why is that? If you look at where we're located, we are in an area that it's shared with Livent. Livent has been producing for 25+ years, lithium carbonate, lithium hydroxide. The sunny handycams that you knew from the 90s or late 90s, those have lithium batteries, and that lithium came from Argentina pretty much. So the whole thing started there. The Panasonic batteries for the Teslas came from Argentina, not Australia. So we are in an established place, and I can tell you a bit about our structure as a company. I'm proud to say that we're more than $500 million today. We are very tightly held, 300 million shares plus, and we have enough cash to do and say and deliver in our studies that we have. So that gives us a strong position to stay away from joint ventures, offtakes, and the likes. And we've done this on purpose. We want to demonstrate what we have. We're walking before we run. We're very conscious about the things that we need to do, but we want to be able to deliver for our shareholders the best value rather than a sugar hit on any announcement saying offtake. So this is critical for us. We want to get it right. We're walking before we run, and this is the whole thesis about Galan. And if you've seen the history of Galan for the last 4 years, we always deliver on time, on budget, and you can see that on a share price. And a bit of the history about Galan and the things that we are delivered and we will be delivering. We'll be delivering a study at the end of the year. We hope to be a producer in 2025. And this is a key thing for us because we've done 4 years of work. Now we got another very good 3 years ahead of us. And this is real. You know, please pay attention to Galan because we are going to become a producer. And this is our goal, and this is where we want to go. So why Galan? So if I can synthesize where we at and what we do. We are in a world-class location, as I mentioned, the best operating salt flat in Argentina. Second best salt flat after the Atacama in Chile. So this is not a coincidence. The grade that they've been reported by the likes of Allkem, POSCO, and Livent, we match them. We have that chemistry, and I'll show you in the next slide. The economics, if you want to see what it's like, the economics that we have, just look at our Allkem if you don't believe what we're reporting. Allkem is on the other side of the salt flat, Sal de Vida, compelling economics, and there are a few steps forward to where we're at, but that's where we're going. So nothing different there, no surprises. It's simple, we're responsible. We are doing things step by step. We are looking into a low energy consumption and water solution to where we want to, what we want to do. So we're conscious that we are at the Atacama, at the border of the Atacama, at the Andes, 4,000 meters. It doesn't rain, therefore there's not a lot of water. So what we want to do, we want to concentrate and use low water usage. There's not a lot of power up there. So what are we going to do? Use the sun to our advantage. So, and we also using technology that's already proven. And again, we want to walk before we run. We want to produce concentrate to then think of our carbonate solution. So you will see that the strategy of Galan is to get to cash flow as soon as we can, lowest deployment of CapEx possible, and be able to secure what we say we'll do, and therefore getting in to get cash flow as soon as possible. So the fast track development that we're doing is very simple. We're trying to attack to produce concentrate to then look into a carbonate solution. Our team is very, I'm very pleased, and I'm very, pleased, excited, and I'm very humble as well to have the team that we have. Every single member of the team is being put in the head and putting to where Galan is today. So I would like to highlight that we have a senior all ex-SQM in our board, and it's been delightful being working with someone with such a strong experience as Daniel Jimenez. He's not here today, he's based in Chile, and there's a lot of his work, direct or indirectly, is because his knowledge, not only commercially, but he knows a lot of people who understood technically, that has helped us to advance this project as fast as we can. And to summarize where we're at, if you want to see where the lithium triangle lays, we are at the Bamborough salt flat. Sorry, take that back. This is where we're at. So live in POSCO Galaxy, and just to give you an idea where the other projects are in the lithium triangle that are of relevance. This is a bit of history and then location as where we are. So we are on the western part of Bamborough, neighboring Livent. To the north, you see POSCO that they have announced that they want to produce as a long-term goal, 100,000 tons of lithium carbonate a year. And then you have Allkem here, and then we have our second project, Candelas, to the south. So all in all, we have 2 projects at the best salt flat in Argentina. Importantly, Livent is being producing carbonate for 25+ years. So we're not reinventing the wheel. If you want to see, can you produce lithium from our salt flat? The answer is definitely yes. So the chemistry, and this is another important point to touch. Ombra Muerto has one of the highest grade and low level of impurity. If you see magnesium to lithium, which is a ratio of impurities, there's another sulfur to lithium as well that we don't have here, but we have in other presentations. It shows that we are one of the lowest in terms of magnesium to lithium. And why this is important? Because magnesium and sulfide, they behave like lithium when you are precipitating them. So we have high recoveries. Therefore, today the prices are high enough that no one cares about what's your cost. But when things turn sour, this is very important because we will be one of the most competitive projects out there, and I'll show you in the cost curve where we sit. So a bit of a flavor about our flagship project. We have a strong NPV of $2+ billion. Our price assumption is one of the lowest in the market, $18,500 a ton. Spot prices today are about 70,000. The contracts that Allchem was reflecting were around $35,000 a ton. If I use even Allchem's prices, our payback is around less than 2 years. So where can you get that in mining these days? Lithium. So don't forget, lithium is there and here to stay. So as mentioned and early on, we have our pilot plant that is moving forward. We have the piloting for our evaporation, and we're moving into the chemical side of lithium carbonate production coming up later this year. And then that's not all. We have Candelas. And Candelas, whilst it's a bit more expensive in operation, still adds another 14,000 to our inventory in terms of long-term production consolidation. So if you add these two projects, we'll have up to, and I believe that we can get up to 40,000 tons of lithium carbonate a year. The studies is showing 34, but the data that we're seeing from Ombra Muerto West is showing that we potentially can go up to 25,000 tons at Ombra Muerto West in terms of our production profile. So when things go sour, you remember this chart. And it shows here where our two projects are located in terms of our lithium cost structure. So in other words, the lithium industry pretty much have to go halfway before we get touched and we walk away from the lithium industry. We have very strong and robust projects. If in whatever time, which I don't believe is in the near future, but if the lithium price collapses for whatever reason, once we sink our capex, we're in there for life. And importantly, another part of the lithium chloride concentrate solution that we want to do is going to be one of the lowest CO2 emissions in the lithium industry. Why? Because we're using lithium, so the sun to advantage. There are 3 areas in the world that's got high radiation levels, and they are all in the Capricorn Belt. The Atacama, the Pilbara in Chile and Argentina, the Pilbara in Australia, and then in Namibia in the southern corner of Africa. So we're using the radiation to advantage. We're using solar power to evaporate, concentrate, and get our product. So the requirement for energy and water specifically as well, for fresh water, which is not much around. We all need the fresh water to dissolve our lime into the ponds and maintain the pH. So we maintain recovery and we increase our concentration. So what are we trying to aggressively do is become a lithium producer? And I might sound like an old record on this, but to get to production with the technology, they're simple. Walking before we run, simple technology, low risk. That's what we're attacking, and that's where we want to get from here to 2025. So about the board, once again, Daniel is in the middle. He's a very strong supporter of Galan, and just for reference, he joined us when we were around 13 cents. And the question was asked, why are you joining us? And the answer was, because we can be $1 billion company. So it's not just me trying to push this a dream, and as a team, as we all doing, but we have people in the industry with 28+ years knowing what it could be done and knowing that Ombra Muerto is the best operating sulfide in Argentina. So bringing back the story to Australia, we have the Greenbushes South joint venture, and also we have a grant that we peg here. There's 100% Galan. So we have a really interesting scope of study here south of the Greenbushes mine, and the Greenbushes mine is the biggest spodumene mine in the world. So early days, however, this is something that is showing a lot of smoke. We want to move as fast as we can. We pending permits for a few things, but we want to show that this is a story that is not only in Argentina, but it has an Australian flavor to it. So recap, we have a project in Argentina at the best sulfide in operations today, that if we get into production will be one of the lowest operating costs. Economically, this is going to be producing a lot of money and a lot of cash flow. We want to get to production 3 years if we can. And importantly, we use low energy, low water, a very sustainable way of doing things. We are responsible. We are currently drilling to move our indicated resource to measured, and that measure will become our reserve statement at the end of the year when we finalize our DFS. So watch this space. I'm really pleased and very proud to be standing on behalf of Galan. I've got a very strong team in Argentina and a fantastic supporting board here in Australia. So I will thank you very much for where we're at. And we have a booth. Please come and say hello. Don't be shy. I'm happy to answer any further questions you may have. Thank you.
Congratulations, JP. Sounds like a very big year. Yes, they'll be the ones with the very large smiles on their faces. Caspin Resources is up next. Caspin Resources had a really exciting 2021 with early exploration success at its Yarrawonda Brook PGE nickel and copper project, which is north of Perth. To explain what's in store there, as well as at the Mount Squires project in 2022, would you please welcome Caspin CEO, Mr. Greg Miles. Welcome, Greg.
Thank you, Chrissy. And thank you, ladies and gentlemen, for coming along today and listening to the Caspin story. This is the second time I've presented at this conference, first time last year. And for those that don't remember, Caspin only listed at the back end of 2020, so still in the relatively early days of our company. But we've kicked a few goals so far, and I think you'll be quite excited by what you see so far. So this is the usual corporate snapshot. We've had a few ups and downs over the last 12 months, but I think probably what the take-home message for this presentation today is about what are the short-term catalysts. I think when you're investing in exploration companies like ours, you should be looking towards the long term, but I think in our case, we also present some short-term catalysts as well. So that corporate slide presents one view of value. I prefer to look at it a little bit more like this. So what does a share in Caspin give you? So firstly, first-class geoscience. We've got a really strong technical team, particularly in base and precious metals, supported by a really strong board from a technical through to corporate side, people that have worked in the junior space and mid to large cap mining companies. So gives us a really strong foundation. And they're supported by a fantastic set of really loyal and supportive shareholders, both foreign and domestic. Our top 20 since listing has hardly changed at all. So we're quite blessed to have some people who believe in what we're doing, and then applying that through to what I believe are two tier one exploration jurisdictions. The Yarrawonda Brook project just north of Perth, which will be the focus of, it's been the focus of our company and be the main focus of the talk today, and the Mount Squires project, which is, we'll soon see some activity as well. And I guess most importantly, and this is the last point there, is that we're active. So when you're active, you're giving your investors a chance we're giving ourselves a chance for discovery and our investors a chance for return. So Yarrawonda Brook, that's where it's at for us at the moment. As I said, it's only 100 k's north of Perth, on our doorstep. Really a new mineral province, believe it or not. For those that haven't been or not familiar, we're operating in an area just north of Chalice. Everybody's heard the Chalice story. A fantastic grassroots discovery, which has led to a plethora of companies now exploring what we're terming the West Yilgarn region. And it's reasonably underexplored, believe it or not, and that's partly because of competing land use, as well as previously being an area that was explored for bauxite and other sort of competing metals. What we've demonstrated so far is that we do have the right sort of rocks, the same sort of magmatic systems and mineral processes that form the Gonaville deposit of chalices. And across the whole project area, we've got about 400 square kilometres there. It's a good size project, gives us multiple opportunities for discovery. But it's mostly about the XC22 prospect. Now, XC22, we've actually been working on within Yarrawinda, there's a prospect area that we call Yarrabrook Hill, and XC22 is a smaller prospect area on the north side of that. I guess the work that we've done to date has been mostly focused on the central Yarrabrook Hill area. Only late last year, we drilled our first hole into what was called the XC22 anomaly. XC22 was actually an airborne EM anomaly, so a conductor. We thought it was kind of interesting. It was a little bit different from everything else that we saw at Yarrabrook Hill. The geophysical signature is actually somewhat similar to Chalice's Gonaville project here. So that was kind of interesting, and this conductor demanded a drill hole. And so first drill hole, Yark22, an RC hole, sure enough, hit some significant sulfide only just beneath the weathering zone, 40 odd metres down hole, returned significant grades of nickel, copper and PGEs. Now, that was reasonably obvious to us. What was the really pleasant surprise was that deeper down in that hole, I mean, it was quite a broad zone of sulfide mineralisation, but deeper down at the base of that sulfide zone was actually this really interesting zone of PGEs. Now, that's platinum group elements, so about 1 gram 4-PGE, and I'll get to what 4E means, as well as some nickel and copper. Now, that doesn't seem very much, but I would bet that with metal prices where they are today, that is actually an economic intercept every day of the week. So it's mostly about the PGEs. Now, most people talk about PGEs, they refer to platinum and palladium. Palladium's obviously the dominant PGE at Gonaville. We usually throw gold in there as a precious metal. But interestingly, we've also done, for the first time ever, assaying for rhodium. Now, what's rhodium? So PGEs are actually a 6-element suite, platinum, palladium being the most common, but then there's also rhodium, ruthenium, iridium, and osmium. Now, we don't often talk about those, and in fact, we rarely even assay for them. And that's primarily because it's expensive and they're not common. But as part of our sort of routine exploration, we just assayed 24 samples through that lower PG zone just to see what else was there. And sure enough, we've got significant grades of rhodium. Now, rhodium, for those that aren't aware, it's used in, well, all the PGs are used in high-end sort of industrial applications, catalytic converters and whatnot. But rhodium is really the Rolls-Royce of the PGEs. And that's what that chart on the right-hand side is. You can barely see it, but the yellow line is gold, the value of gold. The grey line is the value of palladium, and the main line there, the magenta, is the value of rhodium. So it's about 10 times the value of gold. So very rare, but very valuable. And most of the production comes out of South Africa, with a little bit of production out of Canada and Zimbabwe. A lot of the PG mines in South Africa actually generate half their revenue out of rhodium last year, such has been the rapid value increase in that particular commodity. So it's nothing to be sneezed at. So 100 ppb is quite significant. And what we found in Yark22, we got peak values of 465. So that was a real eye-opener. I guess, you know, that it is rare. I don't know if John Aronsky actually makes a comment that that's the highest rhodium assay he's ever received in his career, which is, you know, pretty amazing because he's worked in around the world over a long period of time, and that's the best rhodium assay he's ever seen. So that was significant, and that's why we think that maybe rhodium gives us a little bit of a point of difference, perhaps, to to the other PG explorers operating in the region. But what I guess really gives us some confidence is that we also start to see a bit of continuity of that zone with some of the previous drilling that was done back in the 70s and 80s. So this prospect has been drilled before, primarily for nickel and copper. It's a bit of a patchwork quilt of previous exploration. But it showed some continuity near the surface with some shallow drilling. That's the YBR series you can see on that slide. You know, just down to 100 meters depth at most. But it does show that, you know, perhaps this zone is continuous at depth. Now that lower PG zone is associated with a contact between a mafic and an ultramafic. And that ultramafic rock we can map with magnetics. And that appears as the warm colors on the right-hand side there. And that big white mass is a bit over 1 kilometre long. It's about 1.2 k's. So that's the potential strike of that contact zone. So let's just hypothesize that mineralisation is continuous along that entire contact length. Then all of a sudden we're talking about a potentially significant, a large surface area and a large body of mineralisation. And which sort of leads us to the results that we put out yesterday. We're looking for some confidence that zone of mineralisation is continuous. Now this is only early days. So on the previous slide, there was 2 holes there, Yuck 25 and 27, that unfortunately weren't able to hit target depth back in the drilling at the end of last year. We've just recently diamond-tailed those, and that's you know, some examples of what we've seen in those holes. You know, so we're actually able to recognise significant zones of sulfides in what we believe are the down dip and down plunge positions of mineralisation from Yuck 22. So visually, that's encouraging. I might add that the sulfides, PG mineralisation isn't necessarily associated with a lot of sulfide. You don't need much to get a significant zone of mineralisation, but you know that gives us a lot of confidence. You know, we're stoked that what we're seeing appears to be continuous. Now it's really just a wait and see exercise for the assays. And look, apologies to all our investors out there. I know we've tested their patience in terms of assay turnaround. It is the bane of my existence, but that is the world that we live in Western Australia at the moment. But in the meantime, I think our investors should feel some confidence that what we're doing is on the right track. But it's not all just about about Yarra Brook Hill and XC22. We've actually got this large project area, and we reckon there's multiple opportunities for discovery. We know there's other intrusions in the project area, and so we're working on some of these other prospects, bringing them up to drill ready sort of status. We're collecting data across the project area. We're doing all the geophysical techniques, airborne EM, gravity, and even good old-fashioned soil sampling is a great way of looking for these sort of deposits. And one of those other prospects that we're working on is the Braska prospect. It's on a belt of rocks, at least 17 kilometres worth of strike that extends from the southern end of our project area through to the sort of the western edge. It is broadly the continuation of the same belt of rocks from Chalice's Julimar project. We're drilling a couple of targets there, a magnetic anomaly, which should be an ultramafic rock, and as well as some conductors that we identified through our last airborne EM survey. So some interesting targets that we're actually drilling as we speak, and you know, so there's some other things coming up in our pipeline. But I think what we at the moment, it's really about the results that we get from XC22, and then having there'll be a bit of a natural break, I guess, in the program, and then we're going to go out to Mount Squires. Now, Mount Squires on the edge of the desert. Well, it's not actually on the edge; it's right in the middle of the desert. But on the adjacent to Oz Minerals Nebo Bale project, which is really a sleeper in terms of you know, next stage of nickel copper developments in Australia. They're looking to produce a DFS by the middle of the year. And I think it'll open people's minds to the potential of the West Musgrave region. We're looking to be out there mid-year. There's not a lot I can say in terms of timing and what that program will look at, but we'll hope to bring our investors up to speed on that shortly. So that's really us for now. Near-term catalysts, assay results from XC22. I think that gives investors a reason to hold a share at the moment. We're really excited by what we've seen, and we just need those assay results to come through and confirm our understanding. And then shifting, I'm looking forward to doing some serious work at our Mount Squires project. It's the frontiers. There's plenty of opportunities for discovery in what I believe is a tier 1 jurisdiction. And I think, Chrissy, I'll leave it there. Thank you.
Thanks, Greg, for that presentation. Greg Marlers from Caspin. And our final presentation in this break before we have our lunch break, which is going to last for about 45 minutes. And after lunch, we'll have the 2 auditoriums still running. And then after afternoon tea, we'll all come back in here. So keep your spot, ladies and gentlemen, down the front here. Right, this fella here, he's pretty familiar to most of you, I'd say, Scott Williamson. He is the Managing Director of Blackstone Minerals. Blackstone is a West Australian-based company, and they're currently exploring Southeast Asia's premier nickel sulfide district. Would you please make him very welcome?
Thanks, Chrissy, and thanks to Vertical Events. Great to be back in Sydney. It was actually 3 years ago at this conference that we purchased the Bamborough nickel mine. It's a previously operating nickel mine in northern Vietnam. The previous owners sunk $136 million into the capital infrastructure, and we're looking to turn the mine back on, but we're going to build a downstream nickel refinery and a refining business to produce chemical products for the lithium-ion battery industry. Just a quick corporate snapshot, well positioned with cash at the end of the quarter, $49 million. We've also made some strategic investments that have gone very well, thanks to a stock called NICO, NC1. Our listed investments are now worth $30 million. Got some good liquidity in the stock, so plenty of volume if you want to get in and out. Some very supportive shareholders. The top 20 holds around 60% of the company. Deutsche Balaton, very supportive out of Germany. Fidelity, one of the largest institutions in the world. Great to have them on board. And EcoPro is the largest cathode manufacturer in the world as a strategic partner. You can see there we're working with the Korean Development Bank and Bamborough, the local team here in Sydney, Bamborough Corporate Finance and the Korean Development Bank on our debt advisory. The board is made up of a number of mining executives, and also Alison Gaines is a corporate governance expert, and then we've also got Mr. Jung, who's the finance, he's the representative from EcoPro. So we're trying to build a vertically integrated business here. It is based on partnerships. We have very strong relationships in South Korea and also now in Vietnam. We are looking to produce the first stage of the lithium-ion battery, which is an NCM 811 precursor. So it has a nickel, cobalt, manganese in the ratio of 811 in a chemical product, which is in high demand for the lithium-ion battery industry. We're doing that with a globally significant nickel resource and reserve. We have around 500,000 tonnes or 500,000 tonnes of nickel in resource and 210,000 tonnes of nickel in reserve. So that mine at the Bamborough nickel mine underpins the feedstock into our downstream nickel business. Everyone's seen these sorts of charts. I think the key one to look at is down the bottom right. You can see as an industry, we need to find 1.9 million tonnes per annum, which is twice the current supply of Class 1 nickel is required to be found, discovered and developed by 2030. It's a major challenge as an industry. So unfortunately, there just isn't going to be enough nickel, but we're going to do our best to play a really big part in that movement. So this is where we're located in the northern Vietnam region, out in Son La. The Son La province has the two large hydro power plants. So you can see the hydro at Son La and then also another hydro dam at Hua Bin. So two of the largest hydroelectric power plants in Southeast Asia, right on our doorstep. Well located with a local Vietnamese electric vehicle company called VinFast are building electric vehicles down at the port city of Haiphong. And we have rail infrastructure that goes down to that port city. And we're looking at integrating with that electric vehicle company so that the nickel from our mine will go all the way through to an electric vehicle in northern Vietnam. And what distinguishes us from a lot of our peers is that we will produce the cleanest and greenest nickel in the market. The reason we can do that is because of that renewable power, the vertically integrated nature of our business, keeping it all in country in Vietnam, using a pressure oxidation hydrometallurgic technology, which is much cleaner than the pyromet, which is used in the stainless steel industry. We will be using electric fleet, so a full mining electric fleet. So we're moving towards a net zero carbon outcome from day one. And a lot of our peers are chasing net zero carbon in decades to come. We will be doing it from day one. This is a snapshot of our business. We have the upstream business unit where we have the Bamborough nickel mine, and that's also where we're taking some strategic investments in other nickel miners. The idea being is that 50% of the feed will come from our mine in Vietnam into the downstream business, and 50% will come from third-party feed providers from areas like Australia, Canada, South America, and Africa. We'll bring nickel concentrate into Vietnam. We'll upgrade it into the NCM 811 precursor product. We'll do that with our downstream partners. You can see there that we haven't finalised the partnership model, but we're hoping to be able to come to the market very soon with an idea or to give the market some more clarity around what our partnership model looks like. This is the nickel sulfide district. A number of targets that we've drilled out. We now have 4 or 5 resources, multiple open pit and underground opportunities. It's a large-scale nickel sulfide district, very similar to Jinchuan in China and Norilsk in Russia. So we're in the right rocks, and we're continuing to find nickel sulfide. This was our first ore body that we drilled out, and majority of our tons will come from the Bamborough disseminated ore body. It's a large-scale open pit. We're looking at an 8 million tonne per annum concentrator. So this is a large-scale open pit, 3-to-1 strip ratio. It's a bulk open pit operation. You can see the grades from a nickel equivalent are around 0.44, which is very similar to the Mount Keith nickel mine in Western Australia, which has been one of the more successful nickel mines for BHP. We also have byproduct credits in copper, cobalt, and the full suite of platinum group metals, including rhodium. This is a new target we're working on with the Vietnamese government. It's 10 to 15 times larger than Bamborough. Bamborough will be 10 years of mining. This target is 10 to 15 times the size. So we're pretty excited to put a hole into Chimban in the coming weeks. This was from our recent pre-feasibility study. This is the vertically integrated upstream and downstream. A post-tax NPV of $2 billion and a base case $20,000 per tonne nickel price, which is much lower than today's prices. Internal rate of return of 47%. So very strong economics. Big capex there, 854. I wouldn't be too worried about that because the partners that we're bringing in, that's a small amount of money for them. So we will share that capex with our downstream partners. So you can see here the feed profile is very consistent, around 18,000 tonnes per annum of nickel coming from that big Bamborough nickel mine open pit. 50% of the feed into our downstream will come from that mine and 50% from our third-party feed providers, working very closely with groups like Trafigura, one of the largest nickel traders in the world. You can see when we did the study, which was recently, the spot NPV was $3.6 billion and payback of 1.3 years. This is our flow sheet. There's nothing novel about this. This is tried and tested technology used all through the mining industry since the 1960s. Pressure oxidation combined with solvent extraction. And the back end is where we bring in our partners to produce that NCM 811 product. We have some byproducts in copper cathode. The leach residue is where the precious metals or the platinum group metals will report to, and we'll do further leaching. Kieserite is another byproduct, which is a fertilizer product. There's some snapshots of what's happening on site at the moment. We've got a small underground bulk sample. So I was there recently. That all looks in good order. And we've turned on the existing concentrator. So we're producing concentrate. We've shipped that to the ALS laboratories in Perth, and we're putting that through the downstream pressure oxidation process, and we're piloting as we speak. We're also looking at a second phase of piloting in Vietnam later in the year. Our downstream business is built on this chart. We can purchase nickel concentrate at arm's length from our mine and other third-party mines for around 75 to 80% of the nickel price. So a discount to the LME nickel price. We convert it into this chemical product, which is in high demand, that trades at 120 to 140% payability or a 20 to 40% premium to the LME nickel price. So effectively doubling the value of the nickel by combining it with cobalt and manganese in this 8:1 ratio and selling it at a significant premium. So it's a very lucrative business, and it's built on those relationships that we've built with the South Korean battery makers. So you can see that price has traded between the 20 and 40% premium. It currently sits around 30%. We use 20% as a base case to drive that $2 billion MPV. But it's very consistently trading at a significant premium to the LME nickel price. So you can see that the sensitivities around the economics are driven by that NCM premium. If the premium was to go to zero, we would still have an MPV positive project. We don't believe that the premium will ever go to zero, but it's worth noting that there is still an MPV positive at a 0% premium. The other swing factors are the nickel price and the payability on nickel concentrate. So you can see on this chart, if we were to pay 5 or 10% above the market rate for nickel concentrate and use a conservative premium of 20%, we're still driving a $1.8 to $1.6 billion MPV. So we can go in the market and compete with the majors who have tired and dirty infrastructure. These groups have infrastructure that is set up for the stainless steel industry. We have the opportunity to build a clean and green downstream processing facility that is suited for the chemical industry. We will go in the market, we'll pay above the market rate that the stainless steel producers are paying, and that's why we're confident we will be able to secure the feedstock for our downstream business. So there's a lot of work to be done. You can see there the next 2 or 3 years is very busy. We're in the definitive feasibility study phase and pilot plant phase. Within the next 12 months, we're looking to a final investment decision, and then we start building. My background as a mining engineer, this is what I grew up on, and I'm really excited to be at this really exciting part of that growth phase of this business. Looking to be able to produce downstream nickel products in 2025. So you can see here some big milestones over the next 12 months. We're currently trading at a significant discount to that $2 billion MPV. As we tick off these milestones, we will trade closer to that MPV, and that's completing the definitive feasibility study, the pilot plant phase. So de-risking this project from a technical perspective, de-risking the project from a financing perspective with these partnerships that we're bringing in. Also showing the market exactly what our third-party feedstocks look like, the groups that we're talking to, groups like Trafigura and other nickel miners, bringing in those feedstocks, and then moving towards a final investment decision within the next 12 months. Thank you very much.
Thanks, brilliantly timed, as always. And just looking at the battery minerals, our last presentation today is having a look at the future of battery minerals as well. So stick around and see what that could mean for your potential investment portfolio. Enjoy your lunch. I won't keep you any longer. We've got 45 minutes. Let's